You got me running, you got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up, raise them up.
All right, good morning, everyone, afternoon or evening, depending on where you're watching in the world here today. It is the 21st of October, 2021, and it is episode 401. And thanks so much for joining us as well today. And I hope everyone is having a nice Thursday, or it might even be Wednesday evening, depending on where you are. And this is the Currency Call, guys, and I'll just provide a quick introduction as well. For anyone that is new as well to what we do here, we do the Currency Call every Monday to Friday at 11 a.m. GMT plus 8. And the currencies we analyze are as follows. So on Monday, we do the Aussie and Kiwi. On Tuesday, we do, sorry guys, I just had something pop up. On Tuesdays, guys, we do the Euro. Wednesdays, we do the pound pairs. Today, Thursday, we've got yen and gold. And then tomorrow, we have the CAD and cryptocurrency, specifically Ethereum and Bitcoin. So that's going to be interesting as well, especially with what's happening with crypto. But just also, the currency call is where you'll get market economic updates, the key support and resistance levels, trade ideas, and of course, much more as well. We do have Kim Hong back as well, the rap god. Now, this currency call is going to be very beneficial to both the long-term investors and also the short-term traders. And we'll go through here what could move prices, possible trade ideas, and we'll also highlight the potential targets and risks. A quick disclaimer as well, this is quite important to understand. So any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please do your own research and analysis before entering any trades as well. And again, please use the resources available to you by asking any questions, whether it's in this trade call or if it is in the LCMS Traders Club as well. So just to get things started, guys, I'll just touch upon what is happening with the US dollar index as well. And I'll just bring up the charts here now, thanks to Samtrade. And a little bit to talk about as well, again, on the US dollar. It's been good for me. There's been some nice little talking points. And as we're actually viewing the charts here, we're very tentatively breaking below 93.50. In fact, 93.45 is what I've got here. Now, I want to go to the 1 hour time frame and just get a little bit of context at the significance here. So it is a break lower, and obviously it's very early in the trading session as well, with the Asian session taking place right now. So it's going to be very interesting to see, what happens at around here. If we do see a further downside move, or if we see, and frankly, what I'd be looking for is there's some support. The thing is, there's quite a lot of buying interest at the 93.30s as well. And we've seen that previously. And then really it's going to be back down to 93. But it's, there's not a lot of rationale behind this move. And Jin and I were talking about this, and Kim Hong as well. I mean, there have been a lot of strong earnings out of the US, which is, creating a very strong risk on move. But then we also have a lot of other factors going on as well in regards to the debt ceiling, ongoing discussion. And I guess if we go to the news calendar here with Forex Trading Asia, just to provide a little bit of an outline, I'll just zoom in as well. So when we have a look at yesterday, there wasn't really a lot of news out. We've had a lot of FOMC members speaking. When you see this, really, everyone is much the same. And the only significant individual is really what Jerome Powell says. And we don't have any big meetings or anything like that right now. The Beige Book did come out. And I shared this in the Traders Club chat as well, a trading floor. And I just want to quickly go over that as well. This didn't really help the sentiment on the US dollar either. And I'll just bring that up now. And I'll just go into a little bit of detail about what this is. So, the beige book isn't a hugely price sensitive news release, but it just goes into the economic activity, and this explains it pretty nicely. Again, articles like this are on Forex Trading Asia as well. It's a nice way to start the day if you are in this same time zone as us, GMT +8, or a similar time zone. And essentially, there's just a little bit of the pace of growth has slowed a little bit, but again, this is attributed to what we've mentioned so many times with the supply chain disruptions, the labor shortages, and with the labor shortages, Gim Hong's gone into detail about this in the, especially the NFP releases with the pre-COVID employment numbers compared to current employment numbers as well. So there's still some ways to go. And again, the Delta variant is still causing some issues too. So we've got this going on, but it's going to really have to be some negative news to push the US dollar much further, in my opinion. Now, we do have some runners in regards to the risk-sensitive currencies such as the Aussie and the Kiwi, and they've made some nice moves higher as well. And Gim Hong's actually got a trade idea about the Aussie.
Sorry, Scott, you're muted.
Sorry about that, guys. And just speaking on the risk-sensitive currencies, we do have Gim Hong chatting about the Aussie CAD later as well. But really, for the US dollar index, guys, I would say you've just got to really wait on. Then there's not much news either. So I would just say be careful if you're thinking about taking a reversal on this, and just really, it might have to really dip down to the 93.30s and then back we go, back higher. But limited downside here is my thought on the US dollar index. But those are my views there on that. And also, guys, again, thank you so much for the contributions as well to the trading floor chat and the LCMS Traders Club. And what I will be doing now is we've got the yen, and we've also got gold in focus for today's call with Jin, our multi-million-dollar trader. And we'll go through the trade idea at the end. Is that right, Jim? We've got Gimme at the end there for the trade idea.
But I can go first if he doesn't mind.
Yeah, let me go first.
All right, over to you now, Gim Hong, currency strategist, with the trade idea on the Aussie CAD as well.
All right. It's so good to be back, hopefully for good. Like I said, pray for me, guys. Okay, so the trade idea that I'll be sharing today is Aussie CAD. Upcoming Canadian jobs report may provide a clear trading direction. So it's kind of an irony because initially when I was actually writing up this trade idea, okay, I think it's the next day. Yeah, the next day that the Canadian employment data will be due for release. Okay, and I was actually waiting for the data to actually give me a direction to trade. So at that time, I think let me take a look at the data. Okay, so I think they were actually expecting a slower increase in jobs for the month of September. Okay, and in the end, there was actually a way higher than expected, way higher than previous number of jobs being created. All right, and the unemployment rate continues to fall, and that's actually a spectacular data coming out from the country, Canada, right? So I was actually expecting Aussie CAD to weaken, okay, hence breaking out of this 80 pips region. Let me just move over to the chart, then I'll be able to show you guys clearly. Okay, so this is the chart. As you guys can see, there's actually a purple region over here. So prior to the release of the employment data, okay, Aussie CAD was actually ranging around 80 pips, okay? And you can see this red line over here, all right, this red vertical line over here. This is actually the day that the Canadian data was released, okay? And as a result, we see the strengthening of the Canadian dollar, all right? Aussie CAD was trading out of the purple region, okay? So I was actually hoping that it will trigger my sell stop order, all right? But in the end, it didn't, right? It came close, all right, but it didn't trigger, and then it started going back again, bouncing back into the range. Okay, so for the past two or 3 weeks, right, we have been hearing a lot about Evergrande and things like that, okay? And then I think it was just recently that the Reserve Bank of Australia actually released the monetary policy meeting minutes, okay? So in the minutes, like I mentioned previously, I think a few days ago, that the central bank actually started, okay, the committee members actually started discussing about the whole Evergrande saga. And fortunately, okay, they actually feel that the risk has not yet flowed out of the whole country, China. Okay, so it's still in a way being contained, and I would say it's quite safe for now. Okay, that in a way actually created some, I would say, some hope in the whole Evergrande saga. And as you guys know, the Chinese yuan actually has a positive correlation with the Australian dollar. Okay, so any optimism coming out from the Evergrande saga will actually lead to optimism in the Australian dollar. Okay, moreover, the People's Bank of China, okay, the Central Bank of China, actually mentioned that this whole Evergrande saga, it will be contained. It's not going to be that havoc like the whole Lehman Brothers saga. Okay, so that actually gives the market some assurance, I would say, okay, for now, for the time being, all right, which probably led to the strengthening of the Australian dollar, okay, across the board, all right. In this case, especially against the Canadian dollar for the past 3 days, okay. As you can see over here, it's like some 100 over pips of strengthening, okay, and it eventually led to the triggering of the buy stop order instead, okay, at 0.924. Okay, so I think there's one message that I would like to bring out from this trade idea is that we may actually have an intention to take on a direction, okay, for a specific currency pair in the initial phase due to some fundamental reasons, political reasons, or any happenings around the world. Okay, in this specific case, I was actually looking towards selling the Australian CAD, okay, because of the strong Canadian jobs report, okay, because of the uncertainty caused by the Evergrande saga, okay. So that was my initial plan, but it didn't go to plan, right? It eventually went up and triggered my buy stop order instead. So the point, one of the point that I would like to highlight over here is that from time to time, we may have to do a change in plan when it comes to fundamental factors. Okay, in this case, due to a change in the whole Evergrande saga, the market is saying that they may actually be able to pay back bondholders the interest that has been owed to them. Okay, so all these fundamental reasons change from time to time, especially when it comes to those highly volatile ones, like this whole Evergrande saga, for instance, okay, or maybe even COVID, lockdown in COVID cases, lockdown in countries due to COVID cases, okay. So if you guys are trading, all right, what I want to say is that you may have to change your fundamental bias from time to time, just like that with a snap, okay, which is why it's very important to be trading in a community whereby you guys are being updated on a daily basis about the happenings around the world, be it COVID, be it economic data releases, monetary policy, and things like that. Okay, so at the moment, this trade is making some, I think, 30 over pips, 30 pips or so. Any changes, if there's a need to close this trade and things like that, I will update you guys again on our Traders Club EcoFin platform, as well as our Facebook group. Okay, so with that, we'll see how this trade idea goes. And yep, that's all I have to share for today. I'll hand it back to Scott.
All right, thanks for that, Kim Hong. And guys, just a quick recap as well. The links there are for the sharing the live trading call around as well. So if you do have social media, we'd appreciate just sharing the link up, because you never know who is interested in learning a new skill set or learning about Forex trading as well. So that's the call link there, the top one. And then we've got the LCMS Traders Club link. Like Kim Hong mentioned as well, if you are really looking to excel in your trading, you want to be in a community and LCMS traders. Really, we cover short-term, medium-term swings and also longer-term plays as well. So, and the article's been shared as well, and the YouTube channel. So we've got the yen and gold up as well, and it's definitely been very interesting watching the yen against the US dollar. And we've got Jindal Tai here, multi-million-dollar trader, coming off another very solid month as well. I think there was at one point over 50 positive trades in a row. That has come to an end though, but it was quite a run. So over to you now, Jen, to talk yen and gold.
Thanks, buddy. That was an incredible streak. Unfortunately, it did come to an end. We'll see whether we can get onto another streak and maybe break 100 this time. With that, instead of going yen and gold, what I'll do a reverse. I'll do gold, then I'll do yen. Why that is because, as Scott was sharing with you about the dollar index earlier just then, Traders Club members, we were on the call last night, the live trading session, when we were seeing the dollar index at about that 93.70 level. And then I was telling you that if it gets to 93.63 and then if it breaks 93.56, we're possibly going to see quite a big drop. I don't think it'll go all the way down. I think the next level here, my view, the next level maybe about 93 flat. So possibly quite a bit more downside on the dollar index still to come. So with the view on the dollar index, what it could mean for the gold is that the last time I spoke about it, I said that it was going to possibly come down, test 1777 before shooting up towards that 1847 level. I think that that's still quite a valid view. With the dollar weakening, we could see some move towards gold, towards that reserve, towards gold, shooting upwards towards that 1843 or 1845. So look for that buying opportunity. I think that only when it breaks above 1795, you should be looking to buy, and then you could be looking towards 1830, and then after that 1845 or 1850. So with the way that we have been looking at it, dollar possibly further weakening still to come, with gold possibly moving towards the upside. What it feels like is that across the board, I've had a special request to talk about Aussie and Kiwi. I'll do that in the club platform there. So I'll give you an update on the Aussie and the Kiwi dollar. But just across the board, Aussie, Kiwi, Euro, and Pound, we are possibly going to see that continual move towards that resistance, the immediate resistance levels, because of that dollar weakness. And because of that, what's happening here on the US yen, right? As I shared with club members already, that it's likely to sit right across because dollar is weakening. With dollar weakening, we anticipate that the US yen should be turning towards the downside. But as funds move towards reserve, we're seeing some move towards the yen pairs as well. And that's why there's that bounce around, that consolidation, that move across. Yen has been on that big upward move. It's struggling to turn towards the downside. What I would say for the US yen, still a lot more consolidation to happen. If it does break above 114.55, you could be looking at a 50 pip stop loss for a good 100 pip take profit level, a 1:2 risk reward ratio towards the upside, right? But I anticipate that it's going to sit right across only if it breaks above that 114.55 or 114.60 to be super conservative before we see that move towards that resistance level. Okay, with the way that we anticipate the dollar weakening, pushing possibly the euro US dollar higher. The last time, and I've been talking about the euro US so many times, last week said it was going to hit that 133.66 level. On Monday, when I did the coaching sessions with Traders Club members, we said that at that point it was going to go to 133.66. That view has, if you missed it on Thursday last week, you have caught it on Monday. If you missed it on Monday this week, then you have to wait, right? You have to wait for the euro yen to break, if it does break above 133.66, to see further upside. How much higher can it go towards a daily time frame? We are in a very high position. The last time we got here was in May this year. Going to the weekly time frame, scrolling back, the last time we broke above that point and saw a significant high was 136.99 or 137, and that was back in 2018. So bear in mind what is likely to happen. You can see that it's hit this point here. What is likely to happen? We could see a lot of volatility in this range between 133.66 to 131.74. We're just going to see a lot of volatility. But once it breaks, if it can break clearly above, we can see almost that straight line up towards the next resistance level. So coming back to the H4 time frame, what it means is that you have to wait and be patient for it to break above 133.66. Maybe buying opportunity above 134, a 60-70 pip stop loss for a good, very big 260 pip take profit level. But I'm sure in the middle here, there are going to be a lot more volatility or opportunities to close out that trade. I think this move will be a super long-term trade. Not something that's going to happen over the next couple of days. It will take time to move up towards that massive resistance level from way back in 2018. That's it. Looking at the pound yen, same thing. If you joined us last Thursday, then you would see the pound yen. You'd have missed that first move. Yesterday, I was just sharing with the club members that I was looking for it to break. I'll zoom in one so it's a bit easier to see. I'll wait for it to break above that 158.32 level before looking to buy. I think it's that we're coming very close to that point. This would mean that your stop loss with the pound yen has to be a little bit bigger, because with the pound yen being a lot more volatile, if you put it too tight, you're likely to get stopped out before that move. So you have about an 80-90 pip stop loss for an 80-90 pip stop loss for a good 250 pip take profit level. Massive risk reward ratios, positive risk reward ratios towards the upside. Again, possibly have to wait a little bit more. I'll move this line across. Possibly have to wait a little bit more for this to happen, but for the pound yen to shoot up that significantly, what needs to happen is also for the pound dollar to track towards that 138.70 and possibly even break that resistance to see the pound yen drag that much higher. What you would have noticed is that I've skipped the whole process. I haven't even looked at the news, because now looking at the forextradingasia.com economic calendar, today being Thursday, we have some news, but these are not big price movers for the US. These are weekly jobless claims numbers. These are some employment numbers which are not massively looked at. The Philly Fed index, manufacturing index, is not a big number as well, and even that, it looks like it's going to be dropping a little bit. Existing home sales, not a big price mover. And then on Friday, despite the Japanese yen CPI numbers, these don't change prices too much. We talked about the pound, we talked about the euro already, and then some US PMI numbers, which is towards the end of the week, and that's why I don't think it will move too much. So this is one way to look at your trades, or to look at potential trade ideas. This question was from last night. One of our club members did ask, if you don't have time to sit there and watch the charts too much or pay too much attention to it, how can you still enter trades? You could look at it at a bit of a technical view, especially given that we can now see that there's not a lot of news to be released over the next couple of days. So you can keep your trading simple. Look at it just based on the technical view or the overall broad view, dollar weakening, things moving across the board, moving up towards across the board, quite easy on the yen pairs and gold as well. All right, so with that said, keep your trading a bit more flexible, especially during all these levels, which are multi-year highs or significant high points. We're going to see a lot more volatility. Realize your profits quickly, and then reevaluate before you get into another trade. With that, I'll pass it back to you, Scott.
Thanks for that, Jin. And just in the chat here, in the Zoom chat, everyone, I do have the trade ideas discussed as well. But like Jin did say, there is a lot to get through for these trade ideas in regards to very long-term, well-established levels. So you've got to keep that in mind as well. If you are doing a trade and you are new to trading, you've got to really understand that it almost acts as a zone. And we've mentioned this before, so please be cautious. And if you're uncertain, just trade demo and, you know, just be sensible with the risk management as well in regards to how much you take per trade as well.
Well, actually, if you're uncertain about trading, jump onto the club platform. It's free for the first month. Get on, ask questions, learn how to do it better. We're all there to help.
Let me share the link one more time here, guys, as well, because there are a lot of things that were shared. So just to conclude, as well as Steve, you're right. You want to earn while you learn as well. It's a very unique opportunity that's available here because a lot of these services, it's very hard to get into as a retail investor. So Forex Briefcase, we do allow our retail investors as well with smaller accounts. Click that link, leave your details, and we'll get in touch with you as well. It's 102% nearly as well in just over 3 years. So definitely check that out. Thanks for watching, everyone, and I hope everyone has a lovely day, and we'll see everyone in